Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is March 4th, 2026, and we're diving into the latest earnings report from Mayville Engineering Company, a leading provider of design, prototyping, and manufacturing solutions. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Mayville Engineering, or MEC, has just released their fourth quarter and full year 2025 results, and there's a lot to unpack, from their net sales growth to their strategic initiatives in the data center and critical power market.
Revenue and profitability overview. Let's start with the top line. Mayville Engineering reported net sales of $134.3 million for the fourth quarter of 2025, marking a 10.7% increase year over year. However, they also reported a net loss of $4.4 million. John, can you break down these numbers for us?
Absolutely. The increase in net sales is primarily driven by the acquisition of AccuFab and growth in the data center and critical power market. Despite the net loss, the adjusted EPS came in, which is better than the forecasted 22 cents by analysts. This indicates that while there are challenges, MEC is managing to perform better than expected in certain areas.
And what about their profitability metrics?
The adjusted EBITDA for the quarter was $6.3 million, with a margin of 4.7%. This reflects some margin pressure due to project launch costs and inefficiencies, but it's a solid performance given the circumstances.
Strategic initiatives and market expansion. Moving on to strategic initiatives, MEC has been focusing on expanding its presence in the data center and critical power market. Can you tell us more about this, John?
Sure. MEC secured $15 million in incremental project awards in this sector during the fourth quarter, which is a significant boost. They expect the AccuFab acquisition to contribute $40 to $50 million in revenue for 2026. Their pipeline in this market now exceeds $125 million, indicating strong future growth potential.
That's impressive. How does this align with their overall strategy?
It aligns well with their focus on diversifying revenue streams and capitalizing on high-growth markets. The data center and critical power segment is expected to represent more than 20% of MEC's revenue in 2026, which is a strategic shift towards more stable and lucrative markets.
Operational challenges and cost management. Let's discuss some of the operational challenges MEC faced. Their manufacturing margin decreased and interest expenses increased. What are the key factors here?
The manufacturing margin was $8.9 million, down from the previous year due to project launch costs and inefficiencies. Interest expenses rose to $3.8 million, primarily due to increased borrowings. Additionally, SG&A expenses increased to $9.7 million, reflecting costs associated with the AccuFab acquisition.
How is MEC managing these challenges?
They're focusing on cost management and operational discipline. The net debt to EBITDA ratio stands at 3.7x, which they aim to improve through free cash flow generation and debt reduction. This disciplined approach is crucial given the current market conditions.
Future outlook and guidance. Looking ahead, MEC has provided guidance for the first quarter and full year 2026. What should investors expect?
For Q1 2026, MEC forecasts net sales between $137 and $143 million, with adjusted EBITDA between $5 and $7 million. For the full year, they expect net sales to range from $580 to $620 million, with free cash flow between $25 and $35 million. This guidance reflects their confidence in the data center and critical power market and anticipated improvements in legacy markets.
And that's quite a range. What are the key drivers for this outlook?
The key drivers include the full integration of AccuFab, cross-selling synergies, and the ramp-up of new projects in the data center and critical power market. They also anticipate a recovery in legacy markets in the latter half of the year.
Key takeaways. In summary, Mayville Engineering Company has shown resilience and strategic foresight in their latest earnings report. With strong growth in the data center and critical power market and better than expected EPS, they are well positioned for future success. John, any final thoughts?
MEC's focus on high-growth markets and disciplined cost management is commendable. Investors should keep an eye on their execution in the coming quarters, especially with the new projects and market expansions.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on MEC's performance in the comments below. Until next time.